So in lending, there's two ratios, and a lot of people don't know that. They know the one debt-to-income ratio, the ratio before you have a house payment, and the ratio after you have a house payment.
After you own it, can you afford it?
Right.
Simple.
PMI, you guys, is literally $30, $50, depends on the loan amount,
right.
But it's really inexpensive, and it's a really inexpensive way to now capture a lower interest rate.
Right. What's up, everybody? It's the It's Your Neighbor podcast. I'm Monte Reyement. Anthony's not here this week again. No, I'm just kidding. He's not on vacation. He wasn't on vacation last time. He's on his last speaking event for the year at least, until somebody else calls him to go do speaking events. But he's doing amazing things out in California right now, talking to kids about mental health and drugs and not
Very
to do
important.
them. And
very cool.
Yeah, kind of all those things. So today we got some awesome guests. Our theme of our podcast today is going to be kind of a behind the scenes look at how a real estate transaction goes, and then what are the specific roles that certain people play, little things like that. And to introduce these two, I got some amazing people that are part of my success. So appreciative of everything that they've done for me and Take Action Realty Group. But we have Kristen Ambos from Guaranteed Rate.
Thank you, yes.
And the one and only Chris Charles from Town and Country Title, or is it Gowie now? Or
you can call it what you like. So
I'll let you call it what you like.
Yep, Town and Country Title. Still.
All right, Town and Country Title. So Chris Charles from Town and Country Title, both are making their podcast debut.
Yes.
So let's give them a like, subscribe, all the things. So guys, what's
up?
Two thumbs up, follows.
Yep, check me out on my MySpace, Insta chat me,
Oh my gosh, MySpace.
Chris has a Snapface account if you guys can find it.
That's right.
He's got the one friend on MyFace. What was that guy's name? Tom?
Larry.
Larry.
I thought everybody started with Tom.
I don't
MySpace.
know. Must have been an Eau Claire thing. So.
All right. So Kristen, why don't you introduce yourself a little bit here?
Yes.
Who are you? What you do?
Who am I and what I do? Okay, so
You do some amazing things.
yeah,
but-
thank you. Ditto as well. Kristen Ambos. I'm with Guaranteed Rate. I've been a loan officer in the local industry for a little over 23 years
amazing.
now. Crazy.
Doesn't that make us feel old, though?
Yes, it does make you feel very old. Me, you,
Yeah, we're the same.
all of them.
We have such a cool story, too. We should talk about that today.
We do. So I've known Monty from way back
In the college days.
college days, high school, college. But yeah, so I'm working at Guaranteed Rate right now, and that is just going awesome in the lending space. One of the biggest things I've tried to really do into reinventing, I guess, myself was about, the 2008 and 10 era when the housing crash happened. I was working through that, and one of the things that I saw that I really wanted to change then was the transparency side of lending.
Yeah.
And so that's kind of been the mission I've been on for the last, 13 years.
Yeah, it was slim pickings back then, right?
Yeah.
I mean, not slim pickings, but it was not transparent.
No.
Like, people could do whatever they want and be like,
Whatever
hey,
they wanted.
I just got out of college. I make $200,000. Give me a loan. And they would.
Wild, Wild West.
Yeah, it was nuts.
And I was like, at the time, I remember being naive and young, but I remember being like, something about this isn't right.
Right.
I can still remember, and I will never forget, I had a file that I was doing. So this will just go back to tell you exactly kind of how it went. And I was sending it to a bank. And I sent it in with all of the pay stubs and W-2s because it was the stated income era, but I didn't need to state anything. All the income was legit. So I had my processor send it in. They sent the file back to me, told me to shred it and start over with no documents. They didn't want to see anything. And I thought, that was the first time I thought to myself, this is not right.
Yeah.
Something is odd about this. And again, just naive and, going with the flow
I mean,
at that
we were
time.
26-ish at the time.
Yeah.
27, yeah.
And I remember saying to myself that this can't be right. And then shortly after, the housing crash happened and the world fell apart for a minute. And I was like, this is why I had that gut feeling.
Yep.
And mark my words, I will never do business like this again. And I haven't. So it's kind of made me stand out, but hopefully for the better in many ways.
100%. Well, I mean, you are the top female lender in the state of Wisconsin. So, I mean,
Yeah,
you're doing
for
something
purchase
right.
percentage, sure try to.
Yeah, you're doing all right.
Sure try to. So it's
All
pretty
right.
exciting.
Well, Chris,
Thank
you want to introduce yourself?
Yeah, I'm Chris Charles with Town and Country Title. I got into title insurance about 20 years ago, thanks to my uncle who owned a title company in Milwaukee. but I've been in real estate for probably 40 years. My father, kind of a fix and flip guy before there was fix and flip, he would drag me along when he was working on a house that was a handyman special, and kind of found a love for real estate, which again translates into what I get to do every single day.
Which is awesome.
But going back to your story, I was one of those borrowers on those stated income loans back in 2008
Yes.
and 9. That's how I built up some of my rental, portfolio. And as you predicted, maybe didn't go according to plan. So, but again, I got to live that experience, and like you guys had mentioned, it's shaped me. I hope maybe better for going through that experience and when I get to work with customers today.
Right.
Yeah.
It shaped a lot of the industry and the people that are living and working in it, you know?
For sure. And I think the hard times make you, like you said, you became better because of it. You become better because of it.
Yeah.
We went through COVID, which as a real estate agent, that was the easiest time in the history of the world. So now I think people are going through a little bit tougher side of things, at least as an agent, again, quote unquote, these, interest rates that everybody freaks out about, which they're historically average.
Yeah.
And rates will go back down, and then they'll go back up, and then they'll go back down, and they'll go back up, right? Yeah. So, I mean, you know that more than anything. You've
Always
been
have,
through
always will.
I think my first loan in 2006, and this is wild too, what Kristen was saying. Like, my wife she made $8.25 an hour.
Yeah.
They wouldn't use my income because it was cash, which fair, I guess, because I was a bartender. My credit score was in the fives. And they still gave us a $190,000 loan for our house on $825 or $8.25 an hour kind of income. And I was like, after we built our house and we moved in, and I was like, how the hell did we do this? It was fun. Like, we made it, right? Like, but other people who would have shown that, probably didn't have the wherewithal to get through being able to pay that. That's a tough thing. And we're at 9% interest at the time in 2006, I think I saw like 8.7% or something we were at. So we were paying a chunk.
Right. And that too, like, so right before I met right after, I should say, right before I met my husband, right after we got into his, he had gone through a predatory lending experience with the VA. They definitely took advantage of him. So he was like, can you just take a look at my closing disclosure from when I closed? And I was like, yeah. And what I saw, because I looked at him, I'm like, wait a minute, what's your credit score? And he's like, upper sevens, like 780, 790. And it was. And I said, what's your interest rate? And he was like, it was the same thing, like 7.5%, 8% on a VA. And I I looked at him and I was trying to wrap my head around it. And I said, so hold on. You have a high credit score. You had equity in your house and you're still. So I'm like, give me that disclosure. And I looked at it and you could see where the lender was charged him 3 points.
Oh my God.
On that high of a credit score.
Yeah.
Because then you could also charge points up front and then you were getting paid in the back by the lender.
Yeah.
So the overall amount of money that the loan officer made on his loan was like, this is why I will also never be a predatory lender, if you will, to veterans because they made it too easy. So that turned into my why then.
Yeah.
And
that's a pretty good why.
Yeah, it wasn't a bad one. And I thought I will never do this to veterans again. Right. And there's still so many predators out against them, which still just continues that why.
Wild to me.
Absolutely.
Oh, we help veterans. Oh, do you, or do you help yourself?
Right. 100%.
Yep. Well, good. So I wanted to bring you guys in today to talk about the team. And I think of a relationship between a real estate agent, a lender, and a closing company is that you have to be in unison or things go off the rails pretty quickly. Yep. And again, you two are two of the best that I've ever worked with. And the coolest thing I think is like Chris has been, both of you really have been my teacher through this process. You have 20 years, you have 20 years. I'm only in 5, but I feel like I've been accelerated past other people that have been in the business 5 years because of what you guys have taught me. And of course, credit goes to me too for asking the questions and not letting things just sit out there and simmer. Like we talked about that last week on the podcast, being curious. That's an important trait in any business field is to like get all the answers, right? And don't be afraid to ask those questions. And the ones who do typically grow the fastest.
That's the key point is don't be afraid to ask the questions, right? Like if you don't ask, you don't know.
Right. So I look at it like kind of like a baseball team, right? Like either you're the starter or I'm the starter, and then Chris is the closer. And we have a middle reliever in there somewhere. So oftentimes people will go to a lender to start, or they'll go to a real estate agent to start. And then we start, who would you place them with? Who do you want to work with? Those kind of things. And then Chris cleans up. So Kristen, I'll ask you right off the bat, because this is definitely in order to buy a house, you have to have money.
Yep.
So for somebody out there watching who's a first-time home buyer or buyer in general, like we have one right now that hasn't bought a house in 10 or 15 years and doesn't know where to
A
start.
lot of them out there.
Yeah, and that's great. That's good for me.
Yeah.
So,
Yeah.
People are getting sick of their houses or, their life's changed. Maybe they got to downsize. Maybe they need to upgrade. Babies, kids moving out, whatever. So when we're talking about getting started in real estate as a normal, not everybody's got cash to buy a house. Where should they start, or what are the things that they should be thinking about maybe 4 or 5 months before they even go talk to a lender or a real estate agent to get started?
Yeah. Great question, because that's a lot of times what we get is oh my gosh, I found the home of my dreams, but I haven't been getting myself ready for the last 6 months. And so it's never too early to contact a lender to do that. And one of the things you want to make sure of is you don't have any late payments anywhere. The first thing a lender's going to do is assess the risk. And one of the things I tell people is it's your finances, so you're going to take them personally, right? Anybody's going to take their own personal finances personally.
Yep.
But in this perspective, you have to stay objective in it. So when a lender's coming to you asking for things, it's not because they're trying to berate you or put you down or, judge you.
Right.
And I say judge you in light because
Well, I mean, at the end of the day, your approval is your judgment,
you're
right?
the judgment, right? So you can only say that in
Personally
in jest,
judging
but
them.
personally, they're not personally judging your character.
Right.
They're judging what they see on paper and only. And that's why
Yep.
you got to take the personal side out of it. So you got to look at it and go, okay, if I'm somebody who's missing my payments, I've had 10 jobs in the last year, am I a solid investment? Or to an underwriter where they're just looking at me on paper, they're not looking at me as John Smith. They're looking at me as job hopper who doesn't pay their bills, right? Or they're looking at it going, holy cow, you've been at the same job for 10 years, which is like unheard of right now.
Right.
And you have a really great credit score. You're minimal risk right off the bat.
Yep.
So we're not going to question you as much. But if you've had a lot of different jobs and you've, missed a payment here and there, they want to know why.
Right.
What's the reason for that? And so that's what they're judging. They're judging the scenario on, if I give you a couple $100,000 right now, are you going to pay me back?
Yeah.
And the easiest way I tell buyers is look at yourself. And if you were going to borrow somebody a couple $100,000, would you want to know
Right.
and feel confident that they're going to make their payment to you?
Yes.
You would.
Yeah.
And so that's how you want to look at it. And so when they're asking the questions, they're only trying to make sure that they're getting their money back, because the bottom line is banks don't want to foreclose on you. They don't want to invest money to get paid half or a little bit of what they owe. They want the whole amount back, and they want the interest you pay them.
Yep.
They want it on time. They want to make their money. They want you to pay it off, and then they want to borrow it to somebody else.
That's how they stay in business.
That's the business model.
They learned their lesson in 2008 and
Yes.
9. They don't want to be landlords. So
And exactly,
property
they
managers.
don't want to be landlords.
Yeah.
They don't want to be
They're not
property
good at it.
managers. Yes, that's not what they're interested
They're
in.
interested
So-
in doing what they do, is making enough money to be able to hand out more money.
Right. And that's exactly it. So as long as you're minimizing your risk, meaning you're making your payments on time, when you pay all your bills every month, there's still a little bit left over. Because remember, if you're a homeowner, you might have to get a new refrigerator. You might have to upgrade your water heater. There are expenses to doing that.
Yep.
And so they want to make sure that at the end of the day, you have a little bit of money left over so that you can handle those expenses.
Where does somebody feel comfortable with their debt to income ratio? Like not necessarily even for your lending standards.
Yep.
It could just be a blanket. What should somebody be looking at for their debt to income? Meaning, what are the bills going out? What are the bills coming in? What's that difference? What's the ratio there?
What's the ratio? So a really solid debt to income ratio is probably 36%.
Okay.
We'll lend up to 45,
Yeah.
and in some cases up to 55%. But now, as a lender, if I'm assessing your risk and I'm taking your last dollar at 55% debt to income ratio, and remember that's gross income.
Yeah.
So
That's not after
it's
taxes.
not after taxes.
Yeah.
So it's before gross. So that's
So
why
essentially, it's probably like, if you're really taking the net, it's probably 60 to 70% debt to income.
right. And so that's why I say if you're sticking in that 36 to 40% ratio, that's where you want to be.
Yeah.
Now, if you have a second income we're not using, then again, your debt to income ratio is even lower, making you a much more safe borrower. Safer is not really a word in that category. You're a safer borrower.
Safer. And we'll go with it.
We're making up our own words today on this podcast too.
I think safer is a real word.
Right? Is that right? It sounded funny coming out.
Sounds weird, yeah.
We want to make sure, at the end of the day, it's really about making sure you feel comfortable in your payment and you make the payment to us and you feel confident in what you're doing.
Yep. I've had people ask me too, not the debt to income, but what percentage of their take-home pay do you think is a percentage for their housing payment?
Right.
Do you have an answer if someone,
Yeah, it's tough. So in lending, there's two ratios. And a lot of people don't know that. They know the one debt to income ratio. There's two ratios. There's the ratio before you have a house payment and the ratio after you have a house payment. So
Which makes total sense.
Which makes total sense, right? So
can you afford the house? You can afford it now because you don't own it. After you own it, can you afford it?
Right.
Simple.
Exactly. So there's two ratios we look at. One, we want to make sure. So for instance, if you were doing in a perfect lender's world, we want to see maybe a 20% ratio before a house and a 35% ratio after. Does that make sense?
Yeah, 100%.
So that's the makes sense. Yep. Now, when you have zero debt and your house is only what you owe and it's 36, now you're 36 on the front end and you're 36% on the back end. Well, that makes sense because you're going to have the exact same debt to income ratio for both.
Yep.
Now, tricky thing is a lender doesn't really want to see those two things match.
Okay.
With a mediocre credit score.
Okay.
Because we don't know how you pay bills. So the cash is king thing is always tricky because people are like, well, I'm cash is king. You should want me because I pay all my bills with cash. And it's, yes, that's correct.
We don't have a track record.
But we don't have a track record of how you pay.
Yep.
So do you pay with cash on time? Do you pay with cash whenever you feel like it?
Right.
So yeah, you pay with cash and you have no debt. That's great. But we don't know how you still pay those bills with cash.
Yep.
Are you paying it late and you're just paying the cash to pay the late payment?
Could be.
So that's where cash is king gets tricky. So that's why we like to see a front end ratio and a back end ratio, which.
Spoken from a lender, though.
Yeah, spoken from a lender. I know.
I mean, Chris and I both like cash.
Yes.
When it comes in, you don't make any money off of cash.
No.
Chris and I.
Spoken 100%, 100%,
If somebody comes to me and says, I have a bunch of cash, I'm going to go buy a house, I'm like, let's go.
Perfect.
Let's go.
I'm jealous.
No need to call Kristen.
No need to call Kristen. And to be honest, I'm envious of those people.
And Chris just gets to do a short little signing, and he's happy too.
Yeah.
Verify those wire instructions.
Right. You don't have those lenders telling you what you can and can't do.
Right.
But it is important. I mean, the
Dictating
vast majority of people are not going to have the kind of cash on hand. So understanding what you guys are looking for. And I'm assuming it's obvious to us, but people probably should not be changing their job if they're going to be looking for a new house. Is that a little red flag?
Just had this conversation earlier today. Yes. So the amount of times people are like, oh, they have my pay stubs, they have my W-2s. They won't. They have already done my verifications. Then we do the verification call the day before closing to make sure everyone still has their job. And then I get I was supposed to tell you I changed jobs. Yeah. I want to know that.
Yeah. If they switch in the same field, not necessarily a big deal.
Yeah,
ahead of time, it's probably okay, right? As long as they go from job to another job.
Right.
If there's a gap, that's where the concern comes, right?
Right.
Yeah.
And it's the gap.
You guys have to verify the new employment, so just time.
It's just time, right? So if you're in the same industry, there's a big myth there. And I'm really glad you just brought that up because there's a lot of loan officers right now out there that don't necessarily know the guidelines.
Okay.
So they're like, oh, you can't change jobs in 2 years. You have to have the same job for the last 2 years.
You know, it's funny. I just talked to, Anthony. And Anthony has obviously switched jobs because he's worked here recently. And, and so we were talking to him about pre-approval. And he's like, yeah, but I haven't worked here for 2 years. I'm like, but you were working in the same field, making, maybe even, just as much money in this now as you were before. You didn't have a huge gap in employment, so you should be okay. And all of a sudden now we need to talk when I get back.
We need to talk.
By the time this one airs, Anthony may be pre-approved with somebody. Who knows?
Right. Give me a call, Anthony. It's a shameless, horrible plug.
Hey, that's awesome.
Hey, I would still help anybody out. But no, that's exactly that. Is so many people would call me and be like, well, I got denied because I haven't had the same job for 2 years. And I'm like, first question, how long have you been working for? I've been working for 10 years. How long were you at your last job? Well, I was there for like 6 or 7 years. Oh, no, you're good.
Yeah.
Did you? Well, no, I quit on Friday and started on Monday. That weekend is not considered a job gap, by the way. That's just considered your basic time off.
Yep.
And especially if you're in a salaried role, that is a no-brainer.
Right.
Now, Obviously, it's different if you went from a salary role to commission for 2 years. Now that's why we need 2 years because you're of a variable income now.
Yeah.
You know, so that's not the case. So it's really important to work with a lender who knows how to answer and ask those right questions to make sure that you fulfilled your 2 years.
Yep.
Talked about income and the job length. What about down payment? Because I actually have a friend of my wife who's coming back into the United States. He was living in Canada. Currently not working, but he would have the 2 years in his field once he does get a job.
Yep.
He's wondering if he can put down a super large down payment, if that'll have any impact on his loan, interest rate terms. And I thought, again, seeing you today, that you could maybe answer that question is how much of an impact does down payment make?
Yeah, which is, again, another really good question. So in this situation, if he's moving from Canada, you can't have a down payment, no job, right? You still have to have a job because we want to know where the money's coming from.
Yep.
Now, you can have a job offer letter, and as long as you're starting within that 90-day window of that job offer letter, we can use that income. And what we do is we get the job offer letter, we do a verification of employment with the company, a written one, and then to confirm what's on the offer letter to make sure the offer letter is legit, that nobody made it up. And then we do a verification the day before closing to say, okay, it's non-contingent, meaning if they had to get their licenses approved, a lot of doctors have to have their licenses approved or transferred, those kind of things. So as long as you're licensing and it's non-contingent offer, we're good with that. And we're gonna close that deal. So as long as it's within 90 days of that job start time. So that's also important to know. Now, if you have a down payment, funny enough, it used to be, oh gosh, if you have 20% or more down, you're getting the best rate available. Now, the MI companies play such a big role on this because to a lender, again, we're minimizing our risk. So if you have private mortgage insurance, which I know is like the
Four-letter word here.
words, right? Like stay away from PMI. This is where PMI plays well. PMI tells the lender that we're going to pay you. If something happens, we're insuring this property, right? So sometimes if you have 15% down versus 20, you're going to get a better rate because you have the PMI. Which now takes the lender's risk out of it.
Oh, that makes sense. I never thought of it that way.
Yeah, so it's playing the rate game. If you're really interested in getting the lowest rate, have your lender check 15 to 20%, 19%, 18%, whatever the case may be.
Even if you have, I would assume, even if you have the down payment then, hold that back, get your PMI, get the lower rate, put the down payment down.
And PMI, you guys, is literally $30, $50, depends on the loan amount, size too. But it's really inexpensive. And it's a really inexpensive way to now capture a lower interest rate. Because lenders are going to say, okay, we'll incentivize you because now you're taking the PMI to make sure we're covered.
Lenders
so
covered.
You're willing to do that. So lender shop, make sure you're getting the best rate and make sure your lender's going through those things with you. Then just saying, oh, okay, great, you have 20% down, here's the rate. Maybe it doesn't have to be the rate.
And that's actually, you just brought up a great point too. So we're still in the beginning of the home search, right? We haven't even got into, hey, let's call the real estate agent. You just said lender shop, which I think is important. Like, obviously you want to help everybody. Because that's the competitive nature in all of us.
It's twofold. It's a blessing and a curse, but 100%. I do believe in it.
And we want to be the best and we want to have all the business. And like, I get super jealous when I see other people succeed, but I'm also happy for them at the same time. It's like one of those things. It's like, it just drives me. You know? It's like,
I agree with you.
How did I miss that? But at the same time, like, you can't realistically help every single buyer out there. And I can't help every single buyer out there. And man, I already know Chris is doing 5 closings a day right now with his team.
You can help everybody.
Chris might be the only one that can help all the buyers.
It's either help everybody or hit the gym, and I don't want to hit the gym. So no, sir.
Oh my God,
sir.
that's so true, right?
So my point is this: is find a lender that you jive with. That one is going to obviously be transparent and have your best interest. And there's a lot of really good lenders out there. Kristen's the best, but.
Thank you.
There's a bunch of other ones out there that are very, very, very close to what Kristen can do, and they're amazing as well. In certain cases, even at times, people will be like, "Oh, well, Kristen," I'm like, "What? Kristen's the best." Like, how is that possible? But it's just people.
It happens. Listen, it's got to be a fit.
And I'm sure I'm the same way.
Right? It's a fit. I can be a little. I have a big presence, and I have a big happy attitude, and not everybody likes that.
No, you certainly
it's
don't.
Amazing, but no, not everybody likes that.
I like it.
Thank you, I appreciate that.
There's a few Eeyores out there.
But there's people who are like, "Whoa, too much." I get that.
Hey, we should put a picture of Eeyore in there, Rob.
Right.
Gotta laugh at him.
But no, there's that. And then there's also people who, I'm sorry, I'm such a hand stalker.
It's okay.
There's also people who come to me and they're like, this is what I need. This is what I'm looking for. And I know I'm not the best fit for them.
Mm-hmm.
You know, during the credit union days 2 years ago with the arms, their arms blew everyone away.
Yeah.
I wasn't about to sit and try to sell you on the fact that their arm rate was better than what I could offer.
Right.
Now, what I did try to do, though, is make sure that the people that were taking arms, and this is where you need to decipher between lenders, is the people taking the arms, were they...
For the people watching,
Yes.
what's an arm?
What's an arm? An adjustable rate mortgage. Great question. Like, seriously, because we get so used to our lingo, right?
Yep.
So adjustable rate mortgage, meaning you're locked in, let's say it's a 5-year arm.
Yep.
You're locked in for 5 years to that interest rate. What happens after the 5 years? The arm adjusts. It adjusts to whatever's going on in the market and prime, okay?
It's a little gamble.
It's a gamble. So can you get a lower rate? Can you get a bigger rate? Yeah, it depends on what's going on. Before, probably 2 years ago, the rates were always going down. There was no reason to gamble on an arm. Take the fixed rate, right? And the yield curve was inverted, so a lot of times the fixed rate was cheaper than the adjustable rate mortgage. Well, 2 years ago, that changed, and arms came flooding in.
Yep.
And the arms were a lot lower. But all people saw was the shiny penny instead of the dull nickel. Like, that's they never wanted to look at what this dull nickel was really valued at. And here's why I say it can be, what?
I said, it's 5 cents.
It's 5 cents, right? 1 penny. Oh my gosh, I just had the Saturday Night Live clip in my head with this. Anyway.
Oh, yes.
Right? You know what I'm talking about?
Yep.
So it's like, but I got this interest rate. This interest rate is so much better. You know, it's 5% versus 7%. I get that. I always understood that. But let's say you were a couple, a young couple, going to start a family, and one of you was going to stay home, and you qualified for that arm with both your incomes, and now you only have one income.
Yep.
Just because you own the home doesn't mean you automatically get to refinance. You have to re-qualify to refinance. And that's the problem that a lot of not all, please know when I say a lot, it's a factual statement, but it doesn't mean everybody. Disclosure, always just over-disclose, right? So what I'm saying with that is you now have to requalify for an adjustable rate mortgage. Well, what happens in 5 years when you don't qualify for that same house?
Right.
And the rate adjusts. And it's higher. And now your 5% interest rate is 8 or 9 or 10 overnight. A lot of those adjustable rates change by 5% on the first change. So now you went from 5% to 10%. That's a huge, and can you afford that payment now?
Yep.
And that's exactly what I was trying to help people understand and avoid.
Yep.
And I give you a perfect example. I just had a client who I had to send him over to a different bank. I could not help him. He was, and the same thing goes with retirees. They qualify with their income, but they're going to retire in 2 years. Now they're in a 5-year arm. When people retire, they most always only take the amount of income they need to pay their bills and a little cushion. They're not setting it up going, I want my debt to income ratio to be 30% with my retire income.
Yep.
They don't want to sit on all the extra money. They want to keep it over here making money.
Yeah.
So now they're retired, they need to refinance, and their debt to income ratio is 70 or 80%. Because they're only taking enough to pay their bills and buy groceries and maybe have a little fun. Nothing serious. I just got a call from a gentleman who's like, Kristen, my bank that did my arm will not refinance me to another arm. So now I either have to sell or I have to find a way to pay this off.
Yeah.
He didn't have the money.
Yeah.
So his options were so limited. So now he ended up at a bank because his debt to income ratio is so high, I can't help him.
Yeah.
So now he had to go to an in-house portfolio bank and pay a crazy, ridiculous high interest rate
Probably
just
at
to keep his
10%
home.
or whatever.
And
Yep.
hope to God that rates come down. And now we're a broken record for the last 18 months. Rates are going to come down next quarter. Rates are going to come down next quarter. Hey, the Federal Reserve said in 2024 rates are going to come
We're
down.
supposed to have 3 drops this year.
Yeah, 3 or 4.
Yep.
3. Now we are maybe going to have 1.
Yeah.
Now they're saying, 2025 is the year. Well, who believes that at this point?
Right.
I'm doing business as if rates are never going to drop because no one knows that they're
Right.
going to drop.
And if
We
anybody
hope they
says
will.
that they will,
Right.
Full
Oh,
of
just
poop.
bank on it. Those are going to drop. Those are going to drop.
I think they'll drop. Put me on record.
all right, Chris.
This is being
You guys
recorded.
heard it here first. Chris Charles feels rates are going to come down
Yes.
sometime in the future.
In
In
the
the
future. Lock it up.
You lock it up.
Lock it up.
Well, to your point, though, too,
Yeah.
the house that we bought in Swamico, it wasn't an ARN. It was a 5-year balloon.
Balloon.
Because our family of two, I don't even know if we were married at the time, but my now wife, we were going to fix this house up and sell it. And we didn't. We were forced again into a refinance.
What is a
life
balloon for
changes.
those who don't know what a balloon is?
So the balloon payment that we had, it was amortized. So it was if we were going to be able to make payments over 30 years. So the monthly payment was affordable. But at the end of that 5-year term, the balance came due. We had the, again, choice of either sell the property or refinance.
Yep. So then you hear the balloon pop.
Yep. Balloons
That
pop.
means that your mortgage is due and you cannot afford it.
Yeah. Life changes. I mean, I could have went into that with the best of intentions, the best of plans, but, life changes. So options, and at the time that loan officer, again, probably didn't think that, it was going to be a bad decision for us at the time, but I've come to find out, I try to surround myself with people that have the heart of a teacher. So Jordan Thays, who you work with,
Yes,
is
he's
one of the best
wonderful.
with explaining stuff to me.
Yep.
If I don't understand it, he'll take that time. If I would have known now, I probably would not have made that decision. But you know what you know. We're all learning.
And you're young and you don't know how to ask the questions.
Yep.
Or you're older and this is new and you trust your bank, so you don't know how to answer or ask the questions. So if you don't ask the questions, they don't get answered. Then you learn the hard way. And so that's one of the things that I was making an effort to correct this last time around. Where that's, again, going back to that, not a fit for everybody.
Right.
No lender is.
Nobody
and if they
is.
tell you that they can do absolutely anything for anybody at any time, they don't know.
And they
to
can't.
say that. They can't.
Because one, hey, I'm a real estate flipper. Oh, can I work with you? No, I can't, can I?
No.
No, I want to,
Yeah.
but I can't.
I can try to get you a home equity line of credit to use the cash.
Yeah, that's
There you
about
go.
it.
That's it.
That's
but
it.
you're right. You're right. That's not what we do.
Yeah, and you're amazing at what you do, but you just can't help every single
Thank you.
person. That was my point. So, all right, so we got through the money part.
Right.
Right. So we have the money. You've been pre-approved through Kristen or one of the other amazing lenders that are out there in the world.
Yes.
All right. What's the next step for those buyers? What happens?
Well, they find themselves a Monte and they go with Monte and they go look at houses, shop houses, see houses, determine what's best for them. My biggest thing there is just to make sure you're working with a real estate agent. I mean, you're phenomenal at what you do. You know that.
Thank
You're
you.
great with your clients. And you've flipped houses, you've bought houses, you sold houses, you understand what the ins and outs are.
Yep.
You know what to point out, what not to point out, those kind of things. So you want to make sure you trust your real estate agent to write the contract as good as they can for you.
In some cases, too, and I deal with, obviously, the younger agents that are coming into the field who are 22, 23, 24 years old.
Right.
And again, it's going to be a lot harder for them. They just don't have the confidence to even know certain things in a house.
Right.
Which I think we're doing a great job at, Take Action is we actually have that in our training program now, explaining what's a foundation, what's a furnace, what kind of furnaces are there, all of those different types of things. So they're going to be a little bit more apt and prepared. But it's not to say like don't go with a young agent. It's if it's not your best friend who's the agent, make sure to shop. Make sure to look around.
Yeah.
Find the right person that's going to be there for you. Also find the person who's going to pick up the phone and call you back within 15, 20 minutes to an hour. They all have lives too. So you have to respect, an agent's, life. Like we have, agents who are young mothers and, other agents who have families and everybody's got a life and so on. So respect that. But also, if they don't get back to you within 2 hours or 3 hours or even a text acknowledgement saying that, hey, sorry, I got your text, I got your voicemail, I'm doing this. People understand. But if you just ghost them, that's how you shop.
It's all about the acknowledgement. People just want to be acknowledged. You're
You know who the
100%
best texter is? Chris. Chris.
I'm going to start texting you.
Chris is the most amazing texter. And I know it's not even automated. I don't know how he does this. There was one closing a few years ago. So he gets back to me within like seconds a lot of times. We're both in a closing and I just sent him a text as a reminder text. And he kind of like goes down like this and looks at me and I get a text back and it said received. I'm like, how the hell did you do that?
It's all up here.
He
You're
Jedi'd
magical.
that thing.
Well, we joke, but again, communication.
Yeah.
Backing up just a second, though, because again,
Oh, we're gonna go back to the money?
The money.
All right.
So you've pre-approved somebody, but you've pre-approved them for, let's say, a $350,000 loan.
Yep.
So they go to Monte, and Monte finds them this home that's $360,000.
Happens every day.
So how do
Every
we
day.
help with our lender and our real estate agent avoid that possible issue?
Communication.
Yeah, it's a call.
It's-
Hey, can they realistically do this? A lot
Thank
of
you.
times.
Thank you. We just had one where the agent did not communicate with us. Wrote our pre-approval was for $230,000. Wrote the offer for $262,000.
Ooh.
Showed some investment account. Said, "Oh no, this is where the rest of the cash will be from." But that investment account was actually using for their down payment and closing costs, so they can't double dip on that.
Yeah.
Nor can they take dollar
That would
for
be
dollar
sweet
on
if
the
I could-
investment account.
That'd be sweet if I could double up my investment account
Right.
just to say that.
Right.
Yeah, that'd be cool.
So, yeah, right? It would be so nice. But that's just it. Is like, don't start making financial decisions
Yeah,
for your buyers without talking to the lender.
100%.
Like, you just, and I even say this, like, listen, call me if you're like, hey, we're going to write in this appraisal gap. Do they have the appraisal gap money? Because a lot of times clients don't even know what that means. So they say, yeah, no problem. I'll cover the gap. And they don't have any cash for it. Right?
Yeah.
So you want to know that going in because it's, remember, a legal contract.
Chris, I bet you
So-
love that at closing where you're like, hey, I need the check for this. And, the math is 5,000 short.
Yeah, it's
You're like,
happened.
oh, where's that?
It's happened. But yeah, it goes back to that communication.
Just the communication. So
And it literally is a phone call. Like if you're an agent listening to this podcast and the relationship between Kristen and I can call her and go, hey, I do have a buyer. They're good. I know they're solid, but can they go to this number amount because they really want this house? And usually she'll just go, yeah or no, or yeah, they're great. Yeah, we just set the pre-approval here because this is what they were comfortable with. A lot of times that's the conversation.
yeah, the conversation definitely is like, we start here and then they get out and they start shopping. They're like, okay, we can't find what we love in this point.
Yep.
So then they have to make the decision, do we spend a few $100s more a month in payment in order to get there? Some people do. Some people are adamant that they don't. I'm never going to pressure them one way or another because I'm not making the payment. They are.
Yep.
Yep.
It's up to them too.
Yep.
So we go through that, absolutely. And a lot of times I'll either call a listing agent if my buyers are writing an offer, or I tell the listing agent, hey, I know you have this offer. Call me with any questions.
Yep.
They'll call and say, there's an appraisal gap for 10 grand in here. Do they have the money? And I can say, yes, it's good. I verified it. The
And I
last
think-
thing a lender wants to do is say, I'm sorry. Who are you and what are you doing and what client of mine?
Yeah. Well, exactly. And I think the other thing too for all the buyers watching is make sure you translate that to your agent as
Yes.
well. Hey, I'm pre-approved to 350, but we could go higher. And I'm like, okay, I'm going to call your mom lender and find out.
Yeah,
like, hey,
we're just starting
are we
here.
sure? And then don't send a real estate agent $500,000 houses to go look at either and go, well, maybe we could talk them down. Not in this
Right.
market. Like there's
No.
not just nobody's dropping their $150,000. It's okay to look at houses that are slightly above your pre-approval because you can negotiate that down, and that's actually a pretty good negotiating tactic.
Right.
At times where you find a $370,000 house, it's been sitting there a while, or Kristen's got a relationship with that selling agent, and we can go, hey, but it's Kristen, and they're gonna go, okay, yeah, we have competing offers, but it's Kristen, or it's whoever, that lender that has a good reputation.
Right.
Sometimes you, as an agent, you can say, well, I know these guys are going to get it done. This other, Rocket Mortgage or whatever.
Fly by night.
Yeah, like whatever's out there.
They're not fly by night, but there are some.
Yeah, for sure. So these guys, the chances of it actually closing are slim to none. They're going to go with the local lender who knows the person
Right.
100%.
I will say, too, the biggest thing, I actually lost a deal because I asked for documents. And she was like, what do you mean you need documents? And I said, well, I never send out a pre-approval letter unless I've seen your income, I've seen your assets, and I know what your credit score is.
Right.
So I want to set you up for success.
Yep.
She's like, I have a pre-approval with ABC Bank, and they didn't ask for any documents. And I said, unfortunately, you're going to need to provide them. And you probably just saying you're probably great, but going out and actually having a lender that looks at your documents is really important. And she wouldn't call me back because she didn't want to provide anything.
And there's a difference between pre-approval and pre-qualifying.
Yes. Yeah.
Huge difference.
And the big thing is tell me if I'm wrong. I mean, as an agent and as a title company, right? You get that offer on your desk because they were out with the pre-approval. Now you have accepted offer. Your teams start working.
Yep.
Right?
Yeah.
Everybody starts working, and the last thing everybody wants is these people should have never had a pre-approval in their hand to begin with.
Yep.
Yeah, there was a lender that we had worked with that it got out, no one local, but we would get the offer. Just to your point, we'd start working on it, and maybe a month into the transaction, that lender was doing actual underwriting and would deny the applicant the loan.
Yep.
And we would reach out to the agent, and they're like, well, they put a couple of numbers into an app, and the app approved them, and that's what we went off of.
Those
no
instant
verification of actual documents.
Right. Those instant approvals, stay away from them.
Yep.
Please, please, please stay away because qualifying for income is about as muddy as you can get.
Yeah.
It is not just I make $20 an hour times 40 hours a week and that's what I can qualify for. It's not that. It's so much more that goes into it.
Yeah. And again, that buyer was probably excited when they got that conditional approval, whatever it was. But at the end of the day, how devastating were they that then they were denied that loan?
Right.
And a couple of these files, I remember earnest money.
Right.
And sellers were not happy, and earnest money was not refunded. And a couple of them dragged on for quite a while because, again, the seller was very upset that buyer actually was not approved for that loan.
Right, 100%. And so I always say this, and this is a key fact, and you guys I know will appreciate it and understand it. When you're a buyer and you're working with a buyer's agent and you're making an offer, there's you and the buyer. There's a seller and a seller's agent, right? Then that offer gets accepted. Then there's a lender. There's a loan officer. There's a processing team. There's a closing team. There's a title company. There's a searcher. There's a
homeowners insurance, appraisals.
There's there's a homeowner's
a lot
agent.
of cooks in the kitchen.
There's an underwriter on the homeowner's insurance agent. There's an appraiser, probably somebody who's typing that report. Now we have closing. There's probably 25 people in all these transactions without a doubt that are all doing the work on for your home loan without being paid until that loan closes.
Exactly.
So that's how much we're all investing, not to mention that the last thing I'm going to do is I'm going to throw a pre-approval out for the agent to take time away from their family to go view 20, 30 properties right now outside of the house on something that's as junk as the ink that it's on because I couldn't take some pay stubs and make sure for 5 minutes while I'm sitting at home on my computer.
Thank you.
To make sure that when you're out away from your family, but isn't that the truth?
It is 100% the truth.
And I feel like it just goes so unnoticed and it's so unfair.
Yeah. And I'm glad you brought that up because when you think about a real estate transaction, no, it's great. It's actually really good because you did talk about the 20 to 25 people that are involved and they see the three faces, right? Like the buyer's agent, the lender, the title guy. Yep. Those are typically who they see throughout the process. There might be a couple other people mixed in, but then there's all these people behind the scenes. I have my transaction coordinators.
Right.
I'm the broker, but in a lot of agencies, the broker isn't like I'm the broker and the agent. Versus, then you have a broker, you have an agent, you have a transaction coordinator, then you have a lender, you have their team and the underwriters and everything else. And then you have Chris's team that goes on. And we're just
underwriters, typers, everything.
And we're the face of it.
Yeah.
But there's so many people that get credit for it that go unnoticed.
Right.
And so that's the tricky part about all this. We're the coordinators. We get everything, all handled and done if we do it right. And that's why the team is important, right? Like we talked about the team of 3 of us, but we have our own teams that work on our behalf as well, which is crazy.
And I love that you brought Chris in because title companies are probably the ones that go the most unnoticed and all of the work they do behind the scenes when this starts because they see you at the closing table. They don't understand all the work that's being put in underneath.
Let's talk about that because my role is pretty simple. As far as explanation, you call me, there's a house, you want to see it. I write an offer. There's a lot of nuance to it, of course, besides me writing an offer, getting it accepted. There's a ton of strategy and nuance into that, but essentially, everybody understands my role as a real estate agent.
Yep.
Most people understand your role. They don't understand necessarily know all of the details and the things that go on behind the scenes, but
I agree with you.
They get that. But then you have that guy over there,
the
Chris,
magical part,
the Chris Charles guy. This is literally the guy that allows everything to happen, and that's why we bring him in to close because he is the closer. And they are the protectors of all the things. and they make sure that the money's there. They make sure that the deed is correct. They make sure there's no legal issues.
Right.
They're tying it all together. So, Chris, tell us a little bit about your role, if you were to describe it other than the way I just did.
Yeah, most people, again, and you described it, title company, but, title and then closing services.
Right.
So the title insurance part is, again, the transfer of ownership, where the lender will have a first lien on the property. In case something goes wrong, they get theirs. And then the closing side of it is, again,
call, by the way.
making sure that
Always first lien.
buyers and sellers understand what they're signing, why they're signing it, and then that transfer of ownership.
Right.
But I do, joke a little bit about our job at title is easy because we normally only get to see buyers and sellers unless we're at the closing table.
You get the happy ones.
So we get the happy ones.
Most of the time.
But again,
There's a few other.
Yeah, once in a while. I think there's been a little change, though, maybe in how title companies look at it, maybe asking to be a little more involved.
Mm-hmm.
We now do try to reach out to our lender partners and our real estate agents to ask for contact information for buyers and sellers.
I love that
so
you guys
we
do that
can
too.
help reach out to them
Yes.
so that if they have questions, they can contact us. We are talking about very large amounts of money that are being transferred. And a big fear that we've all had to deal with in the last year, again, is wire fraud and spoofing. And it is something where in the past a good title company maybe was seen but not heard.
What is spoofing? This is the first for me.
Yeah.
So spoofing would be where I could get an email, from somebody that I could literally just copy and paste, create a dummy email account, and send it to a potential customer. And they would think that that email is coming, from their lender or from their real estate agent.
And there's one little digit wrong, right? Or
Yep.
one little period different where you can hardly
Absolutely.
notice. Yeah, I've heard of that.
It's
Scary.
crazy what these criminals can do. And so that's why, again, being upfront with your buyers and sellers right off the bat. If you have any questions, feel free to call me, call your lender, call your title agent. Do not send money. If you have that spidey sense, pick up the phone and call. It's really interesting, again, what some of the stuff these criminals are able to do because homeowners, young and old,
Right.
they don't think it's going to happen to them.
Yeah.
Right.
Or they just don't know.
Right.
The expectation isn't that's out there. But to your point, one digit, can be the difference between you losing a ton of money
Right.
or just having this battle to try to get the money back. There's companies out there that will go and recoup your money, but you're battling to get that money back.
Right. And I've seen it where they don't.
Yeah.
Where they don't get the money back. One of the things, too, is people say, well, can't you just get me the wire instructions? Because the wiring is so big nowadays. People want to wire. And I will never give wire instructions to a title company. I always instruct them, no, but here's the number. Call Chris, ask for somebody on his team to get you their wire instructions, get it directly from them, and take that to the bank.
Yep.
Don't get it from anybody else because you don't know for sure. Because there can be those spoofing emails.
Yeah. We'll have agents and lenders and realtors, same thing. And I'll just say, you know what? We will contact your customer directly. You don't want, as a realtor or a lender, to be involved in that because, again, if your email gets spoofed or there's just some kind of breakdown in communication, we do use a company called Certify that will ensure when they send wire instructions to your buyers and sellers that if there isn't some kind of a hack, they'll cover any kind of loss. They have a direct line to the FBI that if there is some kind of wire fraud, they can reach out, try to recover that money as quickly as possible. Yeah. We don't want to scare people, but we want to scare people that this is happening and it can be avoided with one simple phone call or just, again, asking someone that you do trust, is this legitimate?
Scare to aware.
Yep.
Oh, I like that.
Yeah, I just
I
thought
like that. Scared to aware. No, it's important.
I'm keeping it as my coin phrase.
Right.
It's on the internet.
New hashtag.
Scare to aware in a good way.
That's funny. But no, these are all precautions put in place for people to protect them.
Well, and
not
that's
to
why,
annoy them, to protect them.
Yeah, and again, Chris is, like I said before, he's kind of the protector of all transactions because we've done all of our work. We've got it there. His job is just to get it finished. And he, it's kind of like that funnel where at first, to kind of break down a real estate transaction is you start with two buyers or one buyer, a family or whatever. Somebody has a problem or a want, and that's where the process begins.
Right.
Then they got to go get the money. So if they don't have the money, then they got to talk to Kristen or me, and then I refer them to a lender like Kristen. So that's where that process begins. And then we go through the things of pre-approval, documentation, making sure everything is in line so that when you do find that dream house or that house that's going to be a great fit for you, you're prepared. I'm ready to go. I don't have any questions. I already know that person has got me ready to roll. And my job is just to make sure that I'm doing my job in negotiation, getting you that property, right? And then from there, then it kind of goes back to the lender to do what they need to do next. That goes into underwriting. And that's where the process becomes simultaneous between the three of us, because my job is to get you all of the information that you need. Your job is to take that information from that offer to purchase contract and go, okay, here's the parameters of what we have. Here's all the contingencies that we need to deal with. And it becomes a three-way coaching machine. His company then goes in, verifies that this property is clean and free of any issues. And so it's like a whole cohesive unit that goes on throughout the entire process. And at the end of the day, if you're lucky, all three of us are sitting in a room handing out a closing gift or a smile or a hug, and we're all taking a picture together. And that's the transaction of real estate. But there's so much that goes on from boom, 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 down to Kristen, down to Chris, or whoever that lender title agent is.
Right. I think the other thing that's huge about a title company, too, because Wisconsin's title state, is...
What does that mean?
So some states are attorney states where you need a title company and an attorney.
Yep.
We're in a state where you only need the title company.
Yep.
And the big part to recognize here at the end of it is if you are signing with anybody who's not notarized, that's a big red flag for you.
Yeah.
You should be signing with somebody who's notarized. And the reason why we hire, especially title companies that offer closing services, is because they're like 9 times out of 10, if not 10, notarized, like notaries. But they're the third party to make sure that, let's say I'm the lender and I'm closing you and I'm not a notary. Do you know how much I could get away with in letting you sign this documentation and not talk to you about what's going on in it?
Yeah.
So now you have a third party who's going over every document with you to also ensure that you know everything that's going on in the file. So that's why it's so important to work with a closing company with a notary as well, to have that notary there. That's, again, another protection for you. So the title company is protecting everything in the transaction, if you will.
I joke with people and say, we're Switzerland. We try to be neutral. We want it to close. But again, I have told people too, like I'm bump into you at the mall and I want to make sure that what I said was the correct information and that, people do come out of the transaction, not on that 5-year balloon that I had. And what the hell did I sign, when I took out that loan? But it is just... We all want to make sure that when we bump into that customer, 1 month down the road or 10 years down the road, that they're happy to see us and, thank us for what we helped them accomplish, because it's not easy.
No.
It's not easy.
It just, like, we shared our stories to begin with and the reasons why. And isn't it interesting that we're all sitting here in housing trying to protect people and work with them and do right by them because we all were in a situation where we were wronged somehow in this industry. So if that doesn't tell you what we're trying to do and portray to people, and that's where the education side and understanding, so many people are like, what's title? It's our job to make sure they understand that it's to protect them against any liens or judgments from anything hanging out there. I mean, how many months of chain of title do we get to make sure that there's nothing that fell in the background? Typically 24 months, 48, 100 years?
Well, most lenders last for 2 years. We go back a minimum of 40.
Yeah.
So
the 40-year chain of title. Well, and people don't realize that, but they go back 40 years to make sure somebody doesn't show up knocking on your door saying,
and you know what's crazy to me is if they're not uploaded into a file, you have to actually literally go and search.
Yep.
And go to the courthouse.
Go to the courthouse.
And search through that stuff.
That's where I get to go to Mickey Lou's, because if it's Marinette, I volunteer.
Shout out to Mickey Lou's on the podcast.
Yes,
I love it.
100%.
Are they sponsoring today's podcast?
Yeah.
Hopefully lunch after.
Maybe.
That sounds so good.
I mean, I was just up there fishing the other day. I could have gotten through there. So, all right. So this is the part of the podcast now. We switch it around. Now, Chris has kind of been a co-host here, throwing up some stuff. But you guys, we do this on every single one. Anthony usually forgets. I should have just started like him and then did it. But you guys get to ask the questions now. So we'll do it kind of quick, but we'll start with you, Chris. You can ask me anything kind of question. It could be real estate related. It can be any other thing related.
Gotcha. Who's going to be the quarterback on the rec league football team this year?
Well, that's still me. This might be my last year, though. So if you haven't seen me or my team play, this might be my swan song.
There we go.
4 titles in a row, 44.
Dang.
Yeah, my arm is shot. It is shot. I've been literally rehabbing my arm for a year. Just to play in like some city touch league, football league. It literally makes no sense possible other than I get to go with the guys afterwards and hang out and we get to do something fun. But man, it's getting harder and harder. So this might be it.
Right?
Yeah.
That's all.
I thought you were going to ask me about who the Packers were going to take, but
No. I've given up predicting. So.
my prediction is Graham Barton from Duke.
Nice.
That's the
I'll
center.
never.
He's a stud.
The year they drafted Jordy Nelson, I was out on the western part of the state fixing a rental where the water line had started to leak and the ceiling came down. But driving back from Prescott, Wisconsin to Green Bay, and my buddy called me up and said they drafted Jordy Nelson, and I'm like, who in the hell is Jordy Nelson? And my buddy is like, I don't know, some wide receiver from Kansas State, played safety or whatever. And we both agreed worst pick ever. So what do I know?
You guys were smart.
Look at
What do
that.
I know?
Nailed it. Sorry, Jordy.
Sorry,
that
Jordy.
one tidbit.
Maybe I gave Jordy the motivation to
Oh,
become
I
the
think it's
player.
the latter.
Manifested his chip on his shoulder.
Definitely think it's the latter of the two.
Yeah,
Yes,
we
for sure
get
that.
Jordan on the podcast. He'll have an opinion as to who the Packers are going to draft.
Oh, for sure.
He does quite the research.
Jordan on our
I do
team
the
is
mock.
awesome.
I do. I'm the total nerd because my background is sports. So
Yes.
for a while, I think I've pretty much run out of guys. But I've started working with high school student athletes in 2010, and so a lot of those guys, I wouldn't say a lot, but maybe 7 or 8 of them have been drafted of kids that I've helped and worked with, not through the college process. I mean, and again, I was a very, very small piece of their success. I had not a lot to do with it, quite honestly, but I was a small part of the, advice and, mentorship and other stuff like that. They put all the work in, and their high school coaches and everybody else get way more credit than I do. But it was cool to see like some of those kids that I've worked with go into the NFL. But I think I'm done now. But I used to watch so much tape of.
I remember when you were doing that.
Oh, I love doing it. And I love doing it, but I watch so much tape. So when people talk to me about players and other stuff like that, sometimes I get a little upset. When their opinion is different than mine.
Say what?
And it's like, I'm not in the interviews with the players. I don't know their health records. I don't know all the stuff. I don't know their attitude, but I can talk the talk at least. So that's cool. Yeah. 10,000 kids I worked with. So cool.
Yeah, you remember Jeff Janis?
Oh, yeah.
So one of my buddies, he knows one of the sports guys on the sidelines, and we as the fan. So I always think about this watching the TV. And that one year, all the wide receivers were hurt, so he's getting some playing time. And there's one where I think Rodgers is rolling to his right, pressure. Rodgers throws the ball, and Janis just kind of comes streaking across the field, catches the ball. We all go crazy, first down. My buddy basically told me on the sidelines, I think it was McCarthy would have been the coach during that run, dropping F-bombs because he was running the wrong route and was on the wrong side of the field. Yep. So, again, might be a great guy. And what we see on TV.
Interesting stat.
Behind the scenes.
Jeff Janis has more playoff receiving yards and touchdowns than Justin Jefferson.
Really? Yeah. I think I'll take Justin Jefferson.
Yeah, me too.
Interesting.
Moral of the
Me
story.
too. No offense, Jeff Janis.
I'm learning a lot right now.
Yeah.
Anybody that gets to that level is crazy. All right, Kristen, we could talk football. This would be a whole nother podcast.
I was going to say, I could get my husband in here. He could fit right in. I watched the game.
There you go.
Yeah,
That's
all
all
right.
I
What you got for me?
No stats. I would love to know, since you now have built up Take Action, what's your... and I obviously you're very proud of your team and what you're building here.
Yeah.
But what's one thing that really surprised you of Pride that you didn't expect to come?
Man, there's a whole bunch.
I know, right?
I think it's ever changing because so when you're in real estate and you're an agent, your job is simply clients, right?
Right.
And I had a team at the last place that I was at, and it was great, and it really prepared me for this. But I think you have all of the things that a small business owner has to deal with, and it's multiplied by a ton because now you're coaching your agents to understand it's their own business as well. And if you're doing a good job, they're preparing for taxes and they're doing a good job in marketing. And it's also, you have to realize not everybody is wired the same way as you. You have to be very patient at times because you want to see them. Like I'm in the position I'm in because I love watching other people succeed. You guys know that. And so it's hard sometimes when I want it more than they want it and I know their potential and I have to just be patient for them to realize it.
Yes.
Like to me, that's the hardest part of this job. But I'm very proud of myself for, what we have. And we talked about this in our team meeting this morning. in the last week, we have, I think 6 rookie agents or so right now, and then a whole bunch that are in pre-licensing, which I'm really proud of those that are in pre-licensing because they're showing up for trainings. They don't need to, but they're showing up for trainings and, and they're ready. But I think all of our agents last week got a deal, which was awesome.
amazing.
And that's like the most proud moment that I can have is that we're like getting there. And so, and we had this too, is like, my ultimate goal is really to have my agents be self-sufficient, and I think once we can get that, that's the ultimate, I think, goal. Then that's my retirement then.
That's awesome.
We'll see, but I love what I do. So I already feel like I'm retired. And I look at this as like a process, a strategy game. There's always moving parts in business,
right?
And especially in real estate, because you're dealing with a business and you're dealing with properties and you're dealing with entities and you're dealing with all sorts of LLC stuff and everything like that. And you're just trying to put the pieces in the right place.
Right.
So I feel like I do a pretty good job of that, but we'll see. Time will tell.
I love that you provide the coaching, but like you said, that's one of the best things our CEO ever did for us was he actually put on a like an all company call, his own personal financial wealth people to help us understand how to navigate when 2020 to 22 was massive and busy.
Oh, yeah.
But we knew that wasn't going to be like that forever.
Right.
So he helped us strategize on how we can make sure we take care of that. Yeah. And I think far too many companies on both the real estate and the lending side where people are truly, their own 1099 employer contractor, they need to understand that. And they don't know what that's like.
I think people gluttonied a little bit in 2020 through 2022.
Yeah.
And then all of a sudden that August came around and rates went like this. And then it was like done unless you already had an established business.
Yes.
And even if you did, it was still
hard.
Slow. And you saw a lot of people 3, 4, 5, 6 months after that just be done.
Yep.
They weren't strong enough to get through. But that's the cream rising to the top a lot of times. So
in the tough markets.
Yeah, we all made it. We all made it through that part. So that's
still hanging on.
We're good. So I mean, I feel like I've seen a lot now in 5.5 years. Almost 6 years of 6 years as an investor, 5 years as a retail agent, and it's pretty wild. Like how fast it changes, like monthly. And in Wisconsin, we're very seasonal too. With our that more than anybody because you deal with all the closings. But that's what it is. It gets cold in Hungary in January and February when you don't have any deals for 2 months, from November to December. So it's good. Okay, cool. So let's wrap this up.
Thank you.
How do we find you, Kristen?
You can find me. Best way is just my cell phone. 920-606-1156.
Ambos, A-M-B-O-S.
Yes, thank you.
And Chris, they don't really need to find you. We find them for you, right?
Yeah, I was going to say, despite the joke, I'm not on Facebook, not on Insta, whatever the kids call it these days.
We won't.
On every social platform you could possibly think of.
We'll give you guys the finding details of Chris once you meet with Kristen and I.
Yes.
And then we can send you to Chris Charles at the end of it all. He's like the candy at the end of the rainbow.
Yep. But no, again,
I should start calling you Skittles.
Speak for all of us. We've done it a long time, but again, I think we all have the heart of a teacher.
Yeah.
Yep.
So we do love helping people. So anybody who maybe is a little hesitant to reach out, don't be hesitant. We all learn from somebody, and I think we're all just trying to pass that on. So
absolutely,
surround yourself with teammates that I think have the heart of a teacher, and I think you'll find success like we did.
Awesome.
100% agree.
All right, guys.
Thank you, guys. Appreciate it.
Hey, thanks for coming on, guys. That was this week's It's Your Neighbor podcast. Anthony will be back with me next week. We actually have a pretty cool guest. The Astronomers will be on next week with us on the podcast studio.
So talk about that solar eclipse, or is it the wrong kind of astronomer?
Wrong ones, man. These are our number one hits on the radio for a couple times. So check them out ahead of time.
Cool.
Start listening to the Astronomers this week because they're going to be on. I know all of their songs, at least their old ones. So
very cool.
Probably sing with them a little bit or something. I don't know. Probably not. Hope not. We'll see.
I'm going to listen to them and then be a fangirl out there.
Oh, my God. They're awesome. Their music is so good. It's kind of like an AJR type thing.
Okay.
It's really good. So
very cool.
All right, guys. We'll see you next week. Thanks for watching.
Thank you.
Cool.